So usually when first-time home buyers think about saving money when purchasing a home, they think about down payment assistance programs. But there are other things that you can do to save you thousands of dollars that don't involve getting down payment assistance programs, because oftentimes these down payment assistance programs, number one, you may not qualify for them. Number two, they're loans, meaning you have to pay that money back when you sell or refinance your property. And number three, they come with higher interest rates. So in this video, I'll be sharing two other things that you can do in order to save thousands of dollars for your home purchase. And this is actually a true story of a client that we just helped last month save $22,000 on their home purchase. So without further ado, let's get started. All right, so the first thing that I want to go over is actually your cash to close. This is the entirety of money that you'll need for the purchase of your first home or any real estate, and it consists of two parts. The first part is your down payment, and the second part are your closing costs. So oftentimes when people buy a home, they're like, hey, I want to put 3% down, 5%, 20%, whatever, and that's all they account for, which is not correct, because there's also closing costs that are a part of a home purchase. And these closing costs are typically 3 to 4% of the purchase price. So you can see that if it's a $100,000 home, we're talking about an extra $3,000 to $4,000. So it's very important that you understand that when you're buying a home, there's down payment and there's also closing costs. And that's where this first strategy comes in, called seller credits. So a seller credit is when a seller agrees to pay for a portion or all of your closing costs. Now, how do you get these seller credits? Well, this is where having a great real estate agent comes into play, because this is something that your buyer's agent, the agent that's representing you in the purchase, has to negotiate with the seller or the listing agent. So when you're out there looking for a real estate agent to work with, this is very, very important. You're not just looking for a best friend. You're looking for someone that's skillful, or you should be looking for someone that's skillful, knowledgeable, experienced, and can negotiate these seller credits for you, because it can be the difference between, getting a $1,000 seller credit, maybe even no seller credits, or maybe getting a $16,000 seller credit. So this story that I have for you guys of a family that we just helped a couple weeks ago, the buyer's agent, who's an experienced and skillful buyer's agent, was able to negotiate for our buyers a $16,000 seller credit. That's a whole lot of money. And on top of that, the next strategy that I want to go over is something called a lender credit. This is where you're getting an interest rate that's above market in exchange for help with your closing cost from the bank. For example, let's say your rates are at 5%. and you agree to getting a 5.5%, which is higher, right? What the bank will do is they'll be like, hey, because you're getting an interest rate above market, we're going to give you $3,000 or $5,000 for your closing costs in exchange for the higher interest rate. Of course, over time, you are going to be paying more money in interest, but in some cases, it's actually a really great deal because maybe your payment's going to go up $50 or $70, but you're going to get $7,000 or maybe even $5,000 toward your closing costs. And if you're going to refinance, let's say rates are dropping in the future and you're going to refinance anyway, go ahead and get those lender credits so you can come in with less money, maybe use that money for a reserve account, furniture, etc. So this is another thing that we did with this client is not only did they get $16,000 in seller credits, that is completely free money from the seller, I was also able to get them a lender credit of $6,000 because what happened was I was like, hey, you know, this is your interest rate 5%. A couple days later, rates dropped. So they were like at a 4.8 or a 4.6, and they're like, hey, we still want the 5 we're comfortable with. And because they were getting that higher interest rate, because they were comfortable with what was now the higher interest rate, the bank gave them those $6,000 for their seller credits. So now they were getting a total savings of $22,000 without any down payment assistance program or super high interest rate, and it was free money. This is not money that they have to pay back. So this is something to consider, something to look into when you're buying your first home. That doesn't involve any kind of qualifications. Anyone can do this, you guys, as long as you have a great real estate agent and you have a loan officer that's willing to explain this to you and work with you and explain, hey, if you get a slightly higher interest rate, you know, we can get you $3,000 for your closing costs or $5,000 or even $10,000. They'll give you more information on that. So that's pretty much it for today's video. Hopefully it was helpful. I am licensed in California. If you have any questions, feel free to reach out to me. Send me an email, send me a DM, and I'm happy to help.